Good morning, Manoj. How are you?
I'm good, Mukund. How are you?
I'm good. How was your week?
Week was hectic in terms of everything, personal life as well as markets. Uh, Made some money on the shorts, then started nibbling into longs since Wednesday or Thursday. So made some money after in longs, lost some, and now again waiting into the longs. So let's see how it goes.
Got it. Yeah,
Yeah.
mine was travel. I had to go to Las Vegas for 2 days,
Uh-huh.
day and Thursday. So I was in, I think I told you last week, I started going, or week before that, I started going in cash. I was at 50% cash and then went to
Yeah.
80% cash.
Yep. 80% now.
I'm
Wow.
very happy being, yeah, for a week or so, more than a week, I've been in 80% cash. I'm very happy with that. I did one or two shorts, but lots of just
So
covered.
what makes you? I mean, how do you take this call of you going from 50% to 80% or 100%, and then again getting into it? Is it technicals or is it some fundamental or macro news?
I'm not able to explain it.
I understand that.
It's
We all
very
go
hard
through
to
that. I mean,
explain.
I have been into that.
You have to go through a little bit of gut feel. And we've been doing this for 30 years, right?
Right.
So you kind of know. And then when Microsoft earnings conference call was going on, I was listening to the call. I've had Microsoft stock for a long time. And then
Mm.
Satya Nadella, there was a question that was asked, and the question was, "Hey, when do you expect to see the uplift in revenue and earnings from AI?"
Mm.
And then he said, probably, it's not going to be meaningful for the next couple of months, or I'm sorry, couple of quarters to a year. It might be even 2025 and above.
Wow. Okay.
That's when I sold all my AI stuff.
When somebody like Microsoft says that, you got to listen and pay attention.
So I sold a lot of I have some NVIDIA, but I sold a lot of NVIDIA. I sold a lot of my SMCI, sold
Mhm.
my AI, everything. I just like, this is it. This is the top. And
Right.
perfectly, if you look at that next day after AI, Microsoft earnings, AI stocks have been just going down and
Absolutely.
down and down.
Absolutely.
So I think over time, when you get these experiences, it helps you a little bit. It tells you, no, this is not a good place to be. You initially, I never used to jump on to these mania stocks. Now I just jump on and I get off a little bit early, so it works out.
Mm. Good, good. I normally never get into the many stocks. I mean, you had guts to go into and then come out as well, but I normally don't. Because
Uh,
many is exactly the time when actually I get out of the stocks and everything.
so last week we talked about all of our big tech names: Nvidia,
Right,
Tesla,
right.
Apple, Meta, Palantir, and we said, hey, be careful. And just like we had mentioned, all of them save none. Every one of them
Absolutely.
hit.
Absolutely.
Nvidia, SMCI. Nvidia has got more room to go down.
Yep.
SMCI, after the earnings, they were at 359 before earning. Now they're at 255. So 100%, 100 dollars a share down.
Right.
That's nearly 24%. It's one of the worst performing stocks in the week uh,
Hmm.
for last week. And of course, Upstart, also a terrible performing stock. Right?
Right.
They're down about 40 something percent.
Right.
Uh, but so just quickly, earnings from last week, the 3-4 earnings that I thought that did very, very well. Dutch Brothers, BROS was the name of the ticker symbol. Very good earnings, capped up after earnings, will continue to do well. Celsius, CELH is the name of the ticker, will continue to do well. Duolingo is consistently doing well. I still own stock. I think the company is going to continue to do very, very well. Two interesting new names, Marqeta, MQ, and Payoneer, PAY, are the names that I think you should put on your list. So put on the list names are Dutch Brothers, BROS, CELH, CELH, Duolingo, DOOL, Marqeta, and Payoneer. And then the poor earnings, Datadog had horrible earnings. Upstart had not great earnings. I wouldn't say they were horrible, but they were pretty bad. And then the worst of the lot actually was Doximity, DOCS. So
Hmm.
overall, earnings wise, we had, anytime company did well, they got beaten. The company did badly, they got trashed.
So that shows which way market wants to head. So basically, I mean, I'll always look at from technicals as well as the overall breadth from the markets. As at the same time, good news, bad news parameter that works very well for me. If good news is good news, definitely market is wants to go higher. But if good news also becomes bad news and bad news becomes worse news, hey, you just want to get out and be on the sideline. And as long as market doesn't want to stabilize, don't try to be brave and go into the longs.
Yeah. No, I think that was the interesting part is when you look at a lot of these names, you look at why is it that they're doing well and what they're doing, and then you look at the earnings associated with them. The earnings were good, but not so great that the run up was worth it.
Yeah, it's
You know, some of these
consistent.
stocks have gone 300, 400% for the year from their lows.
Right.
Nothing has happened so good in the company for it to be justifying such a huge growth.
Hmm.
That of course, there are some companies that deserve to go up, but not as much as they've gone up. Like SoFi, terrific earnings. I really thought they did a good job. They're continuing to execute very well, so I think they will continue to do well. But they're taking a
Are they
little
profitable now, or they're still not?
yet. But I think they will get there very soon. They'll get there
Okay.
sooner, I think, than anybody else will. And of
Hmm.
course, student debt repayments begin next month.
Right. That should be a good thing for them.
Good for SoFi, not good for the market. I think a
Yeah.
lot of speculative players will get off the.
Right. Right.
Let's quickly do a summary of the market from last week. SPY, QQQ, IWM, and DIA. Overall,
Sure.
everybody had a little bit of a leg down. Let's start with I guess Russell Futures,
Start
IWM
with
futures.
we'll start with ES as always, so that it gives us perfect analysis to.
Okay, this is SPY.
Yep. So two key channels, and then what is developing is falling waves. So we'll talk about everything together. So last week we spoke about the why I expect. I mean, we have been talking about the markets should be heading lower, and this is what it has been for the last 2 weeks. We started topping out somewhere here. There was a double top where the black line shows, and from the double top it has gone to 20 MA, tried to show some recovery somewhere here, and then again failed, and then continuously has been trading lower, just below 20 MA. By the way, this time I'm not showing 20 daily moving average. It's a 20 exponential moving average. So it's a little different, slightly curvish and slightly, sharper than SMA. But yes, this is what I am showing right now so that my viewers understand what exactly I'm showing them today. I was expecting that it should actually show a bounce from 50 mm, which it did yesterday. But I'm really not sure if it is sustaining, because the breadth and the way it is, hanging around here is something which is not comfortable to me. Although I have nibbled into longs on YM, and there is definitely the comfort of this falling wedge, the chances are maybe somewhere around here. So it goes all the way to, so maybe here, say 4440, 4460 kind of a level, somewhere around it should again come back and then show a bounce. Normally, my sign for topping out and bottoming out is something like this. So if for this particular channel, if you observe this thing, at some point it stops going towards the upper end of the channel, and at some point it should stop going to the lower end of the wedge or the channel. That's where I would say it has stopped. It is topping out or it is bottoming out. In this case, as long as it is hitting this lower end of the wedge, it hit here, it was here, here as well almost, and then bounced and then again hit a low, which means unless for 2-3 such 4-hour candles, if it stops and makes a new high above this 20 MA on the 4-hour, I would not be comfortable whether this low would sustain. It doesn't mean that we cannot nibble into the longs. We can somewhere nibble into the longs somewhere at the lower end of the wedge and then exit in 10, 20, 30 points. No more than that, unless it sustains past these two key 20 MA, 20 as well as 50 MA. And of course, then later after that, there is a breakout as well. This is just a learning for our viewers so that they can understand if they want to trade based on the technicals, how do they go about doing it. Again,
if you go back, just zoom out of the chart to go to March, from March, maybe June, Jan.
Take it to the daily.
Yeah, go to the daily chart. Go since March, I think. If you look at March, so it looks like. So look at that from March, somewhere in the March time frame, at the bottom of March, where it hit the bottom of the channel, right?
Right.
3847, all the way up to 4636. That's roughly about an 800-point gain on a 300, makes it roughly about a 40% almost, right?
Right.
And then this drop is about 5%.
Absolutely.
Right. So you're looking at from the bottom in March, about a 38% gain, roughly about a
Right.
4.7, 4.5, almost 5% loss.
Right.
So it's still up pretty significantly. Instead of going from 3,800 something to 4,600, it's gone from 3,800 something to 4,400, which is still a big gain.
Right.
It stayed in the market during this point, doing nothing but just buy SPY, keep it. You're still going up and to the right? Yeah. So the pullback, it might come down to I think it's probably going to come down a little bit more. It's going to come down to the 7-10% range, in 4,400 or even lower than that range. My suspicion is 4,400 range. But it's hard to say. I don't think it's going to come to the 4,200 range, which is the 200 MA. I don't think it's going to come there, but I think it's going to come at least to the 4,400. It needs a 10% correction before it goes up.
So let's talk about two things here when you are talking about 7 to 10% range. So there is this big gap which had happened. I mean, I'm not a gap theory person. I don't trade the gaps. I just trade based on what my trend lines and my moving averages and all the other patterns and candlesticks show me. So I'm not a gap down or gap up person. I'm not the believer that gap should always be filled. Yet, since many people, the traders in the market and our viewers believe in it, hence I'm talking about it. There is this gap which probably would be filled if this gap gets filled. So which is around, and here is a base as well. There was a 4-hour base which was built from Friday 2nd of June to Thursday 8th of June. So these 3-4 days was a clear base built up. So maybe somewhere around there is a demand zone around 4,300. But at the same time, we would be breaking down of a key channel of the entire 6 months from March till now. If this channel breaks down, definitely it will break down and give a big sell-off as well. So should be somewhere around here, and then a bounce back, which should result into backtest. Now, backtest happens from here or maybe here. That's something, it's a flip of a coin. So you would never know whether it bounces off from here, maybe 4,360 or maybe 4,300. But there will be backtest from somewhere around here and then bounces all the way towards maybe 50 ME or maybe lower. I don't know. I'm just giving this based on, if you are saying that it is 7 to 10%, then somewhere around this 4,300, 4,350 area, we can look at the gap filling area and then bounce. But the bounce will come from the channel breakdown if it breaks down the channel. Normally, these channels result into a good support as well. So I wouldn't be surprised if somewhere around here we see a bounce of at least 2 to 3%, somewhere around all the way up to say maybe 20 ME.
Yeah, I think NVIDIA earnings is going to be key as well in a couple of weeks, right? 23rd of August.
Yeah, that will be key. Definitely, that will be key.
Once it comes in, you get directional correctness on whether, okay, should we say, all right, they're going to continue? Because, September usually tends to be a little bit of a weak month. This time we've got it in August as well. August is also second weakest month of the year usually, but we've got a little bit of a 5% down in August as well. I wouldn't be surprised if we see another 5% off in September.
Interesting.
Okay, SPY to that.
QQQ.
NASDAQ.
Yep, NASDAQ. So similar pattern, like yes, it was this particular channel, the small channel on 4-hour, which is orange, then big channel red on the daily, which was forming upper end of the channel, hit, and then again try hitting, but it did not go all the way towards the new high, and then continuously we have been falling. Broke down below 20 MA, broke down the channel, then again fell below all the way. Now it's almost at the 50 MA. Whether it bounces off from here or whether it wants to sell off further towards lower end of the channel, I don't know. I normally always nibble into the longs around 50 MA. This is my practice, but that doesn't mean it would always be right, because market has its own way of treating us. So I have already nibbled into the longs, but not in the NASDAQ, but I'm into longs of Dow Jones, which is YM. So I would expect maybe some bounce somewhere here towards the upper end of this lower wedge, which is falling wedge, which is on the 4-hour forming. Somewhere around here, maybe bounce towards the 50 MA, 20 MA off or 50 MA off lower this 4-hour channel, which will be around 15,240 or 15,350. So, and then we see from there. I don't know. I'm just hoping it should. It's a hope, and hopes normally do not materialize. So let's see.
I think next week we're going to see a little bit of a bounce, but I'm not necessarily sure that's going to be sustainable.
Yeah. There's one more thing which I have, I have this theory. I've had this theory for almost a year now, that ever since markets broke down from the last year from the top, it's been the weekly chart which has been driving the market. And if it is the weekly chart which is driving the market towards the upside and towards the lower, towards the correction as well, then we should probably be seeing this 20 MA on the weekly, which is around right now at 14,520. May not be, but assuming it is going all the way towards, then it would also be heading towards the lower end of this channel, right? So if it's coming around, say around here, so it will be 1460, 14,600, 700. So that can, so 300 points at least, if it is driven by weekly chart this time as well.
Yeah.
Let's go to Dow Jones and the daily chart.
We had an inverse head and shoulders.
Yeah, we had that was on a weekly chart actually, and then we broke out, then back tested, then consolidated somewhere here, and then again rallied further. And this time, I spoke last time as well, and I still believe that actually Dow Jones has a lot of strength. So all the other, we saw Nasdaq, we saw S&P 500, all of them have fallen all the way towards 50 MA. Dow Jones has still not given up the 20 MA. That shows strength.
I think, Manoj, the two key sectors that I saw with a lot of strength last week were oil and gas, pharmaceuticals, drugs.
Interesting, and that's why Dow Jones is holding up.
Novo Nordisk, Eli Lilly, see them going up along with oil and gas. I wouldn't be surprised to see the Dow Jones actually leading the recovery and a slight rotation happening into oil and gas, maybe some builders, home builders and home-related stocks, and also in drugs and pharma.
So there is one key thing that we need to talk about here is it's not just this time. In fact, this rally, which was led from last year's low, it was in October. This rally was actually led by industrial stocks. Dow Jones was leading from the front, and then it consolidated all the way here, and then again started rallying. And now it doesn't want to give up too. So which is a sign of strength, and we should know where to put our money. We should, tech, of course, rallied all the year and mostly for the last 3 to 4 months. But now it doesn't want to go up. It wants to, relax and maybe take a breather and maybe give the baton to somebody else. So Dow Jones is something that wants to lead. So find out stocks which are part of Dow Jones and then trade according to which stocks lead from the front. As you said, Eli Lilly and maybe some other pharma stocks and some other oil-related stocks. So I would definitely be. I'm long the futures of Dow Jones, but I'm not trading the stocks as of now. So as of now, looks to me that Dow Jones wants to rally, even on the daily chart or even on the 4-hour chart. See, consistently has not. So on S&P 500 as well as on ES, it has given up on the 200 MA of the 4-hour chart as well, not on the Dow Jones, which means it wants to sustain this rally. And probably after this consolidation, it will break out as well.
Got it. Okay. All right. Russ, the IWM?
Yep. Lot of weakness. Ever since it topped out somewhere around here, it has not been sustaining. Look at these red candles. We had this rally, but then it's not sustaining. We can maybe call it as again a second back test of the big breakout that we had. But I would just hope that it sustains the 50 MA at least. If it doesn't, then we have a trouble for small cap stocks. So maybe towards the lower end of the channel is the last hope for the bulls. But right now it's not sustaining and still forming the falling wedge. As long as it is in this falling wedge, bulls have some hopes. Somewhere around here, maybe they will show a bounce and then try and give a breakout and go back above this key trend line, which was a big resistance on the weekly chart. So as of now, no, it's not sustaining.
Yeah. I think there are a couple of interesting stocks that I just wanted to mention. I'm not necessarily sure we have to go through all of their charts. Some earnings for next week. We're going to go through them. But let me just tell you 3 or 4 earnings that were very, very good, at least from the ones that I saw so far. Let me give you a quick example of some of the earnings that I have seen that are very, very good. The one earnings that I think really played very well was Mercado Libre. Very good company, very strong earnings. As you would expect, Mercado Libre, let me just share my screen so that you guys can see. Mercado Libre is actually an e-commerce company based in the South American region, primarily out of Brazil and Argentina, but has done very, very well even in Mexico, South America in general, Mercado Libre has been a strong company, performing very, very well. So Mercado Libre's earnings were very, very good. I thought I was long. Obviously, I've been long on the stock for quite a bit of time now, but overall, Mercado Libre, very strong stock to follow. I've been looking, and I think I've mentioned it somewhere in the 1044, 1080 range. And since then, I've mentioned it on Twitter, it's gone up to 1350. I wouldn't be surprised if this thing heads back right into the 1400 range. There's not much, it's already at 1300. There isn't much for it to not go a little bit higher at least. It's right now in this high end of the zone. There's a little bit of resistance supply zone on the daily chart, but I wouldn't mind seeing it a little bit higher as well. Mercado Libre was a very, very strong earnings report. I thought they did very, very well. Another company that I think in the travel space that has done well, Booking.com, showing a daily chart of Booking.com, very strong earnings. Expedia sold off a little bit after earnings, but then did very well. Look at the huge gap up. I'm going to go to the. Sorry.
It's a mind-blowing chart.
It is just unforgettable. Look at that. Look at that gap up.
Yep.
On earnings, it just zoomed up and then continued to be able to make strong moves. This is a 4-hour chart. It's a 30-minute chart on 1 month. And then if you look at the annual 1-year chart, it has been just relentless. From the lows consistently going up. Little bit of pullback, small pullbacks, but just completely recovering that in a very short order. Booking.com I like a lot. Another good earnings. And then 2 other earnings I'll talk about that I thought were very good. One of them was ANET, consistent performer, very, very, very good stock. Very good earnings. Everybody was expecting their competitors. I've mentioned it at 143. I told people buy it around the 143 range. It came and dipped. I don't know who bought it, who didn't. I bought a lot of it. 179.
Wow.
Consistent earner. Consistent.
20%.
Very, very, very good stock.
Yeah. 20% is a good thing.
Yeah, I like it. And then the last one is Confluent. Very good earnings as well. They guided up to 34, 35% year over year. Smaller company. They're roughly about a $10 billion market cap. 182 million was their earnings. Still not profitable, but I've mentioned it consistently in the 33. It's a good range. Now coming back to that zone again, went up all the way to 37. It took a little bit of profit there. And, it bounces every time off of the 34 range. It went a little bit below earnings, but after earnings zoomed up again. The day after earnings, you can see that strong green candle. So this is a price earnings gap. You're going to find a huge earnings gap before this. I would recommend, because anytime it goes below the 33 range is a good spot to buy. So those are some of the stocks that I have been looking at that would be good companies to look at when the market gets a little bit stronger. Right. So those are the ones that are interesting. Now I'm going to go back to you. We're going to go through a couple of quick charts for earnings next week. Monday is the first one. Monday.com is the name of the company. MNDY is the ticker symbol. Earnings next week.
Okay, it's been following, trading into this particular channel for almost a year now, since last August, ever since it fell down and then has been into this channel. As I've been saying, once the stock stops making a new high towards the end of the channel, that's the time the stock actually wants to go down and not go higher anymore. It has given up on the 20 and the 50 MA as well, and now all the way towards the 200 MA. Now, there is something that a new learning that I would like to show to my readers and viewers. There is something called a trend following. Many people follow trend following very closely. What is trend following? Whenever a stock consistently trades in above 20 and 50 MA, and 20 MA is above 50 MA, it has crossed over and consistently trading above that. That's the upper side of the trend. When the stock trades below 20 and 50 MA, and the 20 MA has crossed over on the lower side of the 50 MA, that means the stock is now heading towards the lower side. Now, this is the first sign when the stock falls, makes sense. So this was a pivot, which is lower high, lower low, sorry. After that, it makes another lower low. and then makes high and makes another lower low, but does not go on to make a new high, but stock, 20 and 50 MA crosses over to the downside. These are two signs which gives you that in the stock wants to go lower now and does not want to go higher. So I would expect the stock to make an attempt to cross past the 20 and 50 MA, but it would not be able to. And if it falls down, go ahead and short. And I would expect the stock to give up on the 200 MA as well after the bounce. So maybe around 165, somewhere 167, the stock would come and then fall back all the way towards the 200 MA again, and probably give up on the 200 MA on the next journey, and probably towards the end of the lower end of the channel.
Yes.
Now, this is my assumption. Stock may or may not exactly go as per this, because whenever we talk about channels and whenever we talk about flags, bullish flags, and as well as bad flags, there will be many such cases wherein the stock makes those crossovers, but again comes back to test the upper end and the lower end of the channel. So do not always rely on these things. But if there is no channel and the stock is consistently on the upper end, then follow the channel as against just the trend following.
Yeah, this is actually looking negative. I wouldn't be surprised if it goes up, but I would be more expecting it to go to 130s.
Probably, yes.
All right, the next one is C Limited, SE.
Yep.
Again, expected earnings. It's been very, very consistently.
So two key things here. So the stock has not been able to sustain, go past this particular resistance zone. So it's a supply zone, a supply line of around 85. So 85, 83, and 90 kind of a zone. It's not been able to go there. And after it has not been able to go there, it has been trying to consolidate and make a base. It's a low base and probably making a weekly base and not a daily base. And the reason I'm saying this is because it has been going here for last almost 2-3 weeks or maybe more. So it's going like 7-8 weeks. So I would expect the stock to consolidate in this zone and then try and attempt a breakout. Whether the breakout is on the upside or the downside, that's something to be seen. But more likely than not, most of the times on the weekly charts, stocks normally break out and not the breakdown. So expect the stock to break out, but don't build your hopes on it. So probably somewhere around here, maybe you can buy and sell around here. But as long as it is into the box, it's not for a long term. Maybe just trade the zone, but don't build your hopes for a very big recovery on the stock.
Yeah, in the low 50s and sell in the high 60s.
Yes.
Okay, the next one is DLO. D Local is the name of the company. Again, trading within a zone.
Within a zone, at the same time, another descending triangle. Now, there are two ways to look into. Either you can call it as a descending triangle, or you can call it as a where is that line? I think I have. Okay. So this particular line, it's a both way. It is actually a descending triangle. Either you draw this particular trend line, or you draw this trend line. In both ways, it is a descending triangle. Descending triangle is actually a bearish stock. Whenever a stock makes a descending triangle and tries to break down of this particular lower base, that's a bearish view of the stock. Now, bearish stock news for a particular stock which is in the 10s and 8s. I don't know how lower it wants to go below that. So I wouldn't be bullish on the stock.
And also, by the way, the stock is below all of the moving averages.
Yes.
You shouldn't be like
20,
even close
50,
to
and
this
200.
stock. This stock, by the way, has a huge following on Twitter.
Wow.
Once upon a time, it was a high flyer. The last one is earnings expected on Friday the 18th Friday the 18th after the stock market closes. PANW, which is Palo Alto Networks. But the news is that the founder of the company might be leaving the company. That's the rumor, at least.
Is that the reason why the stock gave a gap down last week?
Don't know why, but I think the original reason was because they were surprised that they moved the earnings from 30th of August to 18th of August. Then the rumor came, why are they doing it on Friday? Usually when a company announces earnings on Friday, that's bad news. They want everybody to just take it easy and not trade on Saturday and Sunday. But earnings are on 18th, which is Friday, end of day Friday.
Okay. So let's see how it goes, because given that it is almost at the verge of a breakdown, so that is the reason it is actually trying to show a sign of strength, but it is not a sign of strength, it's just a bounce, maybe giving a bounce from the lower end of the channel towards the 20 or 50 MAs. That's where the crossover has already happened. So I would expect the stock to maybe try and stabilize somewhere around here, around the earnings, which is on Friday. And then after Friday, probably a breakdown or maybe a breakout, depending upon how the stock wants to behave and how the earnings are. So it's a very key juncture at this particular breakdown point. So even if the stock bounces here, I would be very cautious in entering into the longs.
All right, Manoj, this was
Yep.
terrific. Very good week. Have a good weekend.
Good weekend to
Everybody,
you and good weekend to our viewers as well.
please subscribe to the channel, comment. We love your comments. Oh yeah, there was one question somebody asked, how do I automate my earnings report in Excel, right?
Right.
So in Excel, Manoj, there is a function called stock history.
Okay.
So let me just show you one quick example. I'm not going to show the whole thing. I just want to make sure that some of the guys can see this. So if you say the stock that you want to follow is MSFT, and you want from today, which is 8/12/23, and then the end date is you want the previous date, which is 7/6/12/23. All right, now you can say stock history. There you go. And then you give the stock symbol name, followed by the start date, followed by the end date, and then you want daily, and there you go.
Wow.
Similarly, you can do earnings, you can do everything.
Awesome.
And then I can just chart it in Excel.
Right.
And as you can see, I've done so many things in Excel. I just love Excel. It's much easier for me to graph it, to chart it. This is my price earnings gap list, roughly about 82 companies on this list. Everything I do is in Excel. It's a lot easier for me.
Awesome.
To do everything in Excel.
Thank you. Learning for me as well. Next time, maybe I'll try this as well. I mean, I understand Excel, but I'm not as expert.
Thank you, Manoj. Thank you, everybody.
Right.
Talk to you guys
Thank
next
you.
week.
Thank
Bye.
you. Bye. Take care.